Is an ETF just an ETF? And are they all truly created equal? We're taking a fascinating deep dive into the strategies shaping the future of ETF investing. Join us on May 20 at 3 p.m. CET for our upcoming webinar, Where Can Indexes and Factors Fall Short? We'll be joined by an expert guest from Avantis Investors, one of the world's fastest growing asset managers powered by American Century Investments. Visit longinescapital.com to register. This episode looks at Indonesian stocks booted out of MSCI global indices, the historic Trump-Xi meeting in Beijing, food insecurity concerns due to the US-Iran conflict, and UK gilt rates rising. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, the founding CEO of Lundgren's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we analyze developments in major economies and financial markets globally. Hello to our audience and hi, Peter. How are you today?
Hi, Mel. I'm doing good. It's very busy, but waiting ahead is a long weekend here in Denmark. It's a public holiday today, I think, in many countries in Europe, and I think many people will do the bridge on Friday. So it's a long weekend for many people. I think here at Lundgren's we are open as always, and will also be a lot sort of to cover and to do the coming days. But we're happy when we're busy. How are you doing, Mel?
So yes, a lot of moving parts here at Lundgren's. Of course, on our end at Lundgren's Investor Insights, more articles are coming. We're always writing and preparing for the next one. So that's something that we're looking forward to releasing soon. And of course, it's the second quarter, so new magazines are underway. So a lot of stuff to be excited about. And actually, Peter, I want to start over the discussion today with Indonesia. So, fresh news coming out of MSCI. We've had this on our radar screen for a while. The MSCI started raising the alarm bells in January over Indonesian stocks. It's mainly over stock frying, so manipulation of stock prices and internal sweetheart trades. And now it seems they're getting the punishment from it. So just on Wednesday, it was announced that 18 Indonesian stocks will be delisted from the global MSCI index and the small cap index. That would be by month end. And while the MSCI did not specifically say why, it's kind of straightforward to see where they're coming from. So the concerns have been flagged early on this year, and it seems that the global trading platform isn't really satisfied with how the Indonesian government responded. There have been reforms, yes, regarding higher minimum public float requirements and some shareholder transparency initiatives, but it might not be enough. And yeah, we have raised alarm as well over this issue that corporate governance is something that's taken seriously by global investors. Of course, you would rather invest in stocks which are more transparent, more predictable, more market oriented versus stocks in a country where there is doubt about the credibility of the valuations. And yeah, of course, it is something that matters, especially for a big investment platform. And of course, this would trigger some rebalancing to Indonesia's disadvantage. So some net outflows are really expected. And the impact has built up over the past few months. And year to date, the Jakarta Stock Exchange Index is actually down 22%. So it is really feeling the pinch because, of course, on top of the regular pessimism regarding the global oil crisis, there is this very big question mark regarding the credibility and the transparency of local stocks in Indonesia. And of course, if you're a foreign investor, you'd want to steer clear of that, or like um deload your weighting of Indonesian assets, at least for the interim until they get their act together. And maybe that would also like lead you elsewhere, maybe in neighboring markets or other developing countries
Mm.
where the regulatory environment is a bit better. And there is still one major decision coming, and that's whether the MSCI will downgrade Indonesia into a frontier market. That is up for evaluation
Yeah.
in June. So a lot more to watch
Mm.
out for, and it's quite larger than this decision.
Yeah, that is a true serious decision about if the price is that Indonesia simply will be regarded as a frontier market. We will see. So far, I think the solution now was sort of maybe you call a bit of a trade-off, yeah, and where Indonesia should say they were lucky, or the Indonesian stock exchange, whatever, whoever. It could have been even worse. Yeah. But this is sort of the first sanction from MSCI, and as you say, it's clearly a signal to other countries, also to other exchanges, whatever,
Mm-hmm.
that they do look at the quality of what is actually what is listed
Yes.
stocks, and particularly, of course, the quality that is included in their own indices. So there's a big lesson to be learned here from maybe others, but it has been outspoken in Indonesia, and let's say as a next month it would be extremely interesting. It would be a disaster for Indonesia if they are downgraded. But a fantastic, interesting topic. Indonesia is, after all, a huge nation, as a big
Yes.
nation here, and also in that sense an important economy in Southeast Asia.
Yes.
Yeah,
Let's stay in
good.
Asia, Peter, where all the action is over this week. As we're speaking, US President Donald Trump is in Beijing with his delegation of American corporate executives to visit Chinese President Xi Jinping. It is quite of a landmark visit because that's his first, I think, the first of any US president in about a decade. And of course, that
Mm.
follows like a year since the Liberation Day tariffs and that whole fallout, as well as the middle of the US Iran conflict. And I think the circumstances are very, very different from Trump's previous visit during his first presidency. Back then, Trump was so like arrogant. He wanted stuff out of Beijing. But now they're coming from a position of, I guess, relative weakness or softness because um in the heart of it all is the US trying to ask China to be the mediator with Iran, which is quite a unique position for China to be painted as the sober diplomat in the situation, whereas like the US, or at least Trump, would like often like to paint China as the bad guy. So it is a very different position from the previous visit. And of course, at the center of the discussions, we should not forget that the tariff negotiations are still underway. So that sounds like a 2025 problem, but really they have not reached a trade deal yet. But what would really take up attention would be how China's role would shape up in this US Iran conflict. Um, just last
Mm.
week, Iran's foreign minister was in China as well. So the position of China is very clear. Like they're trying to be the big brother to these two countries, and it's it's something that maybe the world didn't expect to see, like looking ahead few years ago. But now this is where we are, and China also has the upper hand in this situation. It's better positioned to withstand the oil crisis. They have more reserves. We've talked about this in the past few weeks. They also are
Mm.
able to access the Strait of Hormuz and supplies from Iran. more than any other country. And yeah, so now they are a key cog in discussing of how they can let the ships pass through freely the Strait of Hormuz again. And they also do enjoy the rare earths advantage. So I also
Mhm.
expect that they could bargain about the exports of American made NVIDIA chips or any high end chips that were previously covered by a US ban to China. So a lot of moving parts there
Yeah.
and a lot of fireworks probably, but of course Trump will try to claim that he's victorious with what he wanted to achieve, but I don't think it will be as glorious as he paints it to be.
It's truly the giants that are meeting, yeah. The biggest of the two biggest in the world, yeah. They're actually meeting now. It's really important, I think, for many reasons. It's important they speak together. For me, it's a bit unclear what the plan for Trump and his team is. So
Yeah.
what is it they want to achieve and what can they achieve? And as I say, Trump he needs a lot actually. The question is, what is number one on his wish list? Is that somebody who could help him to broke a better deal with Iran? This is something that could give sort of a fast push back home in the economy. Yeah? And honestly, if there were sort of quick fix solutions where he would trust and claim that this is boosting the U.S. economy, I think he would choose that as number one and see how to how to deal with Iran and iron out as best the best he can. But it's a big question, and I'm not so sure they have a great plan. China on the other side is they will never lean back. Of course, they will not. But they have a more comfortable position. They surely would like to have access to more semiconductors and as a AI chips. Yeah, that's without any doubt. But would there be other, how to say, tokens or prices they will go for? Yes, and that is of strategic political importance for China. And let's put a name on it. It's Taiwan.
Yes,
As this is number one for sure on
definitely.
President
Yeah.
Xi's list. Yeah, conversation about if they can have Taiwan or not. That will never ever happen. But it is a conversation about the wording surrounding Taiwan, and in particular the U.S. wording of
Mm-hmm.
Taiwan. And now it is a China-U.S. meeting, so they do not necessarily need to discuss Taiwan, as Taiwan is not participating.
Yes.
But this is where China would like to push it. It is without any doubt. That is heavy interesting. Depending on the wording, if there will be, that will also that would be a factor for the outcome for the U.S. President Trump. Yeah. So this is amazing. So so we're looking for as of from as a as when we are talking about China, if we look at the market, we will look at Chinese access to AI chips and normal chips and all this stuff. That will probably mean something for as for the tech sector in China. And then on the US part, it's what as whatever could help the economy or could help Trump towards the midterm elections. Yeah, that would be the factors. Of course, the oil as oil traders will look at if there are any sort of signs of deals concerning Iran. Yeah, as any easing up. Despite the long weekend in Europe, we will be busy. As this will take a lot of attention.
Yes, definitely.
Very exciting.
Now that
Yeah,
we're on the
yeah.
topic of oil, Peter, actually, there is a quite compelling figure coming out from the Food and Agriculture Organization of the UN. Um, so apart
Mm.
from, of course, we are already feeling the effects of the US-Iran conflict through the pump prices for oil, for gas, for diesel. But the
Yeah.
FAO is saying that food prices, the impact on food is still not yet peaked. It has not yet peaked, so it is there's quite of a lag, and it's starting to make itself felt. And the longer that the US-Iran conflict is left unresolved, the more it would continue to rise as far as food prices are concerned. Really, the concern is just I think it's multiple layers of impact. So of course, the cost of transferring food items is higher because of higher oil prices. At the same time, the cost of growing the food is higher because fertilizer is also largely affected by this crisis. Fertilizer prices already spiked substantially during 2022 when the Russia invasion of Ukraine started. And then now again, one third of fertilizer supply, or at least the components of fertilizer, pass through also the Hormuz Strait. And now it's it's unsure how easy or how hard it is to let shipments pass. That is also piling up. And the global food price index is actually the highest in 3 years already. It's up 2% year on year,
Mhm.
which is,
Yeah.
of course, continuing to pick up further. And again, similar to the oil prices, Asia as well as Africa will bear the biggest brunt as far as food prices are concerned. And therefore, the forecast is more people will go hungry. And yeah, it's also there's
Mm.
also this very small anecdote coming from Japan where even packaging for food items are being affected by the crisis. Like we've seen black and white potato chip packets because they don't have ink to print it because it's also trapped somewhere along the way in Ormuz. So something you don't expect to see in one's lifetime, but here we are. And there is also
Uh,
that larger fear of pushing people towards starvation. It's if you watched Project Hail Mary Peter, it sounds like it, but in this time it's human
yeah.
made. It's something caused by a world leader attacking someone else or a different country. So it's spectacularly weird to see how much impact this crisis is causing. It's food insecurity. Then there's also the El Nino effect that's being expected later this year. So it's quite a warning sign as far as food supply and food prices are concerned. And of course, it's not good, especially for developing nations. And in general, affordability is a question, even for the old economies, Peter.
Yeah, exactly. And this sort of reverse back to the question: how much pressure Southeast Asian households feel now? Is it are they still doing okay? Can they absorb the price increases, or do they start to suffer? Or where are we? You think?
I think inflation is starting to rise and it's picking up fast. So it's only a matter of time when more people seek out benefits, more aid from government. Wage increases don't happen as fast in developing economies in general. So, for example, in the Philippines, we reported a 7.2% inflation, and then there is a prevailing mechanism here that sets wage adjustments for minimum wage earners like once a year only. So it does not correspond to the rate of inflation. So it's hard sometimes for these households to catch up with the pace of price increases.
It will, of course, influence the household consumption in terms of how much they can consume
Yes.
apart from food. Is it painful or is it still manageable? That's sort of because in what is interesting is what our, sort of what we have had a conversation about now and then, that in several countries in Europe, in these
Mm-hmm.
old rich economies, households are complaining. And the question is, in general, some European households more squeezed than Southeast Asia, and we so far we have actually seen signs of that the
Mm-hmm.
past 9 months, and it is a big shift actually.
Yes.
So this is the reason why sort of the question. You are sort of in the middle. You are in true insight, yeah. So I don't know how. So it's just my feeling that that people can still sort of
Mhm.
cope with it.
I
Many
think
households can still take it, the
yes.
pressure.
I think relative to like households in Europe, middle income earners in Southeast Asia are able to, maybe they're just substituting to like a cheaper variant, but just to meet the budget that they used to have. But it's not like they're skipping meals, or like it's a substantial increase at the moment. Uh Oil prices have kind of pulled back from like the peak that we've seen in the last few weeks. Yes, of course, as they're complaining verbally, yes, but
Mm.
it's not in the level that they are demanding a change in government or a change in policy immediately, just because times are so much tougher. They're able to keep up just now.
Yeah, and that is interesting actually. It's important so when we talk about a global market rest of the years, rest of this year, I would say, or 6 months ahead at least. So interesting, and we will of course revert to household situation in Southeast Asia as it is private consumption that needs to drive the economies forward. Yeah, so it's important.
We're seeing, Peter, a different, like, immediate reaction in the UK, right? Overnight, I've seen like demands for a change in leadership. It has
Mm,
reflected already in market rates.
yeah. Last week we touched the US 10-year Treasury bill. Yeah,
Yes.
the mightiest rate, just rate of all in the world, being at a 10-year high. Now, this week it was followed by a true jump in inflation here. But of course, most of it is due to energy prices. And we have a true belief that will correct lower again.
Mm-hmm.
Now, um, but last week, as we mentioned, having US 10-year rates at a 10-year high, without seeing growth going up, on the contrary, is now is more under pressure. Then this is a concern. This is a true concern because especially the US economy is still that flexible and liberal or free that it actually reacts on changes in the interest rates.
Right.
And this, as I'm seeing interest rates going up as we're doing, that is contractive for the economy. Now, this week, we have seen, not only this week, but in particular this week, we have seen a new peak, and we've basically seen the same UK. When US started to attack Iran, the UK rates went up immediately, and that was due to inflation fear. Now, what we're seeing, sort of in particular this week, is that 10-year UK interest rates, they're called gilts,
Yes.
they are at the highest level. The interest rate is the highest level since the global financial crisis, and we are talking about almost 20 years. It is since 2008 and 9. This is serious because the US economy might be a bit under pressure, but the UK economy is completely down in the cellar with around zero growth or close to zero growth, or what people feel as zero growth. And for many people, that means also they are in a negative growth scenario.
Mm-hmm.
One reason is, yes, as mentioned, oil prices, energy prices went up, but this week it is a outright reaction on the political developments. It's a fear of the current UK government as a
Yeah.
survival will increase the public spending, as a meaning even worse budget discipline. And this is a fear. And to have 10-year rates at this level in UK economy, that is also pretty flexible still. And that is contractive. What happens now is contractive for the economy. It is a disaster, and we have seen the same reactions in the European continent, and we'll see more of that. That the politicians are faring that bad, that interest rates are actually coming to these levels where they'll be painful, and that is without any plan. As we are worried, as this actually worries us. Because we see the zero growth and we see increasing interest rates, all of a sudden, decade or more than decade high levels. This is something we spend time on. We can disclose that. And if we convert it into clouds on horizon, it is clouds on the horizon that, and these
Definitely.
these kind of clouds we really don't like. Also, if interest rates goes up because GDP growth is heating a bit up, yeah, okay, uh, that we can deal with, that we understand. This is how a crisis actually develop in small steps in the very start. It doesn't need to convert into a big crisis. A lot of things can happen before that, but this is how it starts. And this is why we are very observant. Yes, not that particular positive, but as mentioned last week as well, if there are bad news out there, we of course need to take them on the table. And this is some of the things that really
Mhm.
finds a bit bigger space on our plate. Interesting it will be for sure.
Yes, Peter, actually, you already started with the discussion on our outlook. Of course, as far as the UK, there are definitely heavier clouds in their horizon. As far as my region,
Uh,
Peter, in Southeast Asia, in China, the continuing oil supply crisis is a concern. It is also a heavy, heavy cloud that kind of refuses to dissipate in the it we're going into the third month of the attacks already, so of course it is a concern and we are feeling the pinch. But as far as resilience, as far as affordability throughout this crisis, there is some resilience among households in Asia. I don't know if it's we can say the same for the mature economies, Peter.
we will see. As what we have done lately is to say, okay, we favor a shorter duration for the fixed income portfolio, and that is obvious why rates are going up. So we need to adjust. We still see the world as a bit like the discussion today. Can the world absorb the different shocks? And we are looking very much into private households because it is private consumption that needs to drive the world forward, and it's particularly the countries, economies where we're looking at that we favor is where the households are strong enough to absorb whatever comes, sort of
Mhm.
small and bigger challenges now and then. And this is still where we see, and that is why we have the discussion today as well. That is in Asia, Southeast Asia, China, the households are actually doing okay. Some feel the pain a bit more than others,
Yes.
but it's still where we see robustness. The overall picture stays for us. We are comfortable with the world. We recognize that the oil price will stay high for a longer time, and we know some food prices will also go up. The predominant rise in inflation will come down again because it's due to energy prices. So the world is not that how to say it? It's not that shaken. But we are observant. We stay positive. We still see the upsides in the different markets where we recommend to be positioned. But there are some clouds out there, and we have talked about some of the dark clouds a bit further on the horizon that we don't like. They do not have to become bigger. We will see. So yeah, that's probably how we feel right now.
Well, keep watch, Peter, as always. Thank you to our listeners, and thank you, Peter, for sharing your insights with us. We'll be back next week. Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Longines Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts. Longines Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.